How do I find the money to start? Let's be honest, most Americans don't have an income problem. Over a lifetime, millions upon millions sometimes of dollars flow through our personal economies. But without a framework, without intention, a focus, it's easy to get lost in the chaos. You've seen the headlines, the noise, the fear. It's everywhere. It's pervasive. And yet, we're still here trying to do the right thing by our families and build something that lasts. Today, we're cutting through the clutter and getting to the root of one of the biggest roadblocks people hit on their infinite banking journey. Whose? Yours. How do I find the money to start? Too often, people are sold on the power of IBC, and rightfully so. But no one sits down with them to create a real funding strategy. And what happens next? Stress, regret, worry, policies that don't perform. Worst, policies that lapse, and families left wondering, did I do this right? And it was too good to be true. This webinar is designed to fix that, to address that directly, head on. Whether you're just starting out or ready to scale your system, we're going to walk you through how to fund your policy in a way that feels clear, flexible, and aligned with your values, where you're at today, and your vision. No overwhelm, just honest, practical tools to help you move forward with confidence. Because at the end of the day, infinite banking isn't about buying a policy. It's not even necessarily about the right structured policy. It's about what's right for you. It's about building a system that helps you take control, build guarantees, keep more of what you earn, and stop giving it away to other families. Create generational momentum. Interrupt the pattern. Let's dive in and start mapping your path forward. So, what are we going to talk about today? In today's agenda, we're going to talk about where do you find the funds? Like I said, most people make plenty of money. And just think about it. If you made $100,000 a year, then you make $1 million go through your fingertips within a decade. If you make 50,000, then $1 million go through your hands in 2 decades. So where do you find the funds? What if we just show you how to weigh in, where to look for the funds? We've talked about this before, but again, this is repetition. This is consistent and clear action. This is making things both meaningful to you and manageable. IBC can be an and. It can be an and, a both. It doesn't have to be an or decision. And we're going to talk about something. Now, I've been wrestling with this because this was brought to me by my podcast partner talking about a floor and a ceiling when it comes to the design. And I'm going to take it a step further and I'm going to talk about our future selves. Who are we going to become? And what does our floor, our standards look like, the minimum, and what is that ceiling where we're aiming for with a focus and intention of path forward, and then building that security through flexibility. If you guys believe like I do, the wealthy have more choices. Full stop. Put a yes in the chat, a yes down below if you agree with that. If that makes sense to you, that the wealthy do indeed have more choices, say yes. Say yes out loud. Yes, they do, Jason. And we want more choices. We work hard. We trade our time for money. Remember, there's only 2 ways to earn money, or money is only earned 2 ways said differently. Human makes money, or money makes money. Some guy, he's pretty wise. He said something along the lines that we have to learn how to make our money go to work for us while we sleep. Otherwise, we're going to work until we die. His name's rhymes with Muppet, Buffett, something like that. You guys know that guy, right? So let's dive into this together. We've seen the agenda. So let's look at, again, how do we fund your infinite banking policy? That's a strategy, not stress. How do we turn something that seems scary and over there and make it something that's guaranteed, something that you're comfortable with, something that you know that it is manageable and meaningful to you? Again, most people already have the money. They don't just realize that they're losing control of it every day. We want to help you find the money that's already leaving your system. We want to look and have you financially weigh in. We want to help you go from the gap to the gain, from being a borrower, which we're all taught to do. So don't feel bad. You've been groomed this your whole life since you were a little kid and you were given a piggy bank. You get your little money. Sometimes I would remember, anybody go through your couch cushions during the weekend or when your mom's vacuuming and just try to find coins? I think maybe my mom was probably sprinkling some coins in there. I just had that epiphany right now. So I could find them and put them in my piggy bank. And then when you wanted to buy something, you'd save and then you'd spend. And then you do it again, right? We were taught these habits from an early age. And it's okay if we don't know what to do or you don't know what to do what yet. We don't know what to do yet. Imagine this. You go to a nutritionist, super recommended by all your peers. Your peers have had incredible results. They have went from one state of being physically to fit. They have improved their fitness. They have improved their looks. They feel great. Their energy is improved, and you want the same thing. Is that any different than money? But just saying, you want the same thing. So you go really excited, believing that things are going to work out this time. And when you go to the nutritionist, if they're worth a salt, they're going to ask you something. Hey, what is your focus? What is your outcome? What is your end result? And why? And why is this meaningful to you? Why is this important to you? Why do you need to go there to get there to lose the 10 to 15 to 20 to 30 to 50 pounds, whatever it might be, or just to get stronger, to get more fit, shredded, whatever it is? Well, they want that because they want something to hold you accountable. This is what your community's for. Someone, something to hold you accountable. That's why we have coaches. That's why we have mentors. That's why we have parents and friends and coworkers, people that can hold us accountable, peers. Then this nutritionist is going to ask you to do something. You guys have heard this. What are you going to have to do next? You're going to have to write down everything in your notebook. You're going to have to scribble down how much do you eat and when? How much do you drink and when? And keep track of it for 2 weeks and then report back. And then when they ask you, hey, Jason, why did you eat a tub of ice cream of Ben and Jerry's at midnight on Saturday? The 28th or 29th or whatever Saturday is going to be. And I'm going to be like, I don't know. It tasted good. I was going to stop after a few bites, but I just kept eating. But that's how they're going to hold you accountable. And it's the same thing with our finances. And what I'm going to show you in the upcoming webinar is, where do you find some of this leakage? How do you get aware so you can make progress? Because progress equals what? Right in the chat. What does progress equal? In your life, when you make progress towards a goal, what does it equal for you? I'm guessing it's happiness, joy, wonder that you did the thing that you set out to do. And how's that feel? It feels pretty good, right? We can pat ourselves on the back, give ourselves a high five, celebrate that emotion because we have made progress. So let's look at where, over my 3,000 calls, I have seen some of the biggest hidden cash flow sources. I could spend probably 10 to 15 minutes on each of these sources, but let's look at some of them. We've talked about it before. Where do the banks keep their money? Where do they keep their money that has to be secure, that has to be stable, that has to be protected? Their tier one money, it's called. I try to remove all the jargon, but if you want to look stuff up, banks have tier one money. Safe, protected, reliable, guaranteed money. Where do they keep it? They keep it in the policies, in the specially engineered whole life with a mutually owned dividend paying whole life company. All those words are important, but they keep it there. And how much? Oh, I don't know, 225 billion plus? Look it up. It is bonkers. And why do they do that? Because it has to be safe and protected. So let me ask you, and there's nothing wrong with keeping your money, your emergency fund, your 3 months, your 6 months, your month, whatever it is for your family, whatever you've been taught, whatever you've adopted. But I would ask you, is that the most optimal place to keep the money? What if you had access to all that same money and It was growing for you, guaranteed, and it was protecting your family in case you shuffle off this mortal coil and you're no longer here. That is one place we might find some money. Maybe you don't keep 6 months, maybe you're keeping a month. We might just unlock a bunch of savings that you didn't even know. And then what about your debt pay down habits? Who here has been in debt? Anybody? Put it in the chat. Raise a hand. Have you been in debt before? Have you been out of debt and then back in debt before? Have you repeated the cycle more than twice in your life? I have. I made all the mistakes. Don't ever see me talking to you, teaching you, leading, and helping you unlock your freedom as someone who knows everything and has done it all right. I have messed up more times than I care to admit, and thank God I did, because I had the opportunity to grow in that moment. So when I look at people who are paying down their debt aggressively, they're like, say, I talked to a woman today. Her one bill was $100 a month, and she was paying $8,000 a month when she could towards it. That's a $7,900 difference. Pretty extreme, but will she ever answer this? Will she ever make money on that money again? No, she will not. Will it protect her family? No. Does it do anything else other than go to the other family? No. So then, if you were going to use infinite banking as a strategy to take back control of your money, might you consider not paying more than the minimum for a period of time to be able to pay that off and take back control of it? That's another place we might find a leak in your bucket. And even the wealthiest families have leakage in their financial bucket or leakage in their financial education of future generations. And then we have our qualified plans. We talk about this a lot. But again, the questions are to ask yourself with Uncle Sam, your partner, your silent partner, who's definitely coming in at some point on your postponed taxes and be like, John, psst, Jeanette, yo, Shane, hey, man, whew, that's been a wild couple decades. I mean, the stories I could tell you, man. You can't imagine what I've seen. You can't imagine where I've been. You can't imagine the amount of money I spent. I had a blast. You've been working hard, diligently, growing our little tiny seed to a massive, massive harvest. And even though I blew it, I'm going to need that, I don't know, make up a percent, make up whatever popped in your mind. Uncle Sam has every right to come in and tell you, give me mine. It's mine. We were partners. I don't care how hard you worked. You have no guarantees. Why not look, if you're suffering from debt now or you're suffering from cash flow issues, maybe consider looking at taking care of yourself now, loving yourself a little bit more, and stopping giving away that money to your future self. Many people, many times, you can find 500, 1,000, even a couple $1,000s a month of financial leakage that's leaving your family forever. Why not just redirect it? Remember, we're only changing one thing. So this is a call. This is a way where you can get ready for your journey by writing the stuff down in your notebook. How much do you make? How much are you spending? What are your expenses, your debts, the interest rates, the monthly minimums? Weigh in. Those are some of the things. Where is your money going? What buckets are you storing your money in? This is the deep dive into this. Again, we could spend the whole time right here, but there is hidden cash flow in most cases. And if there's not, guess what? If you're thirsty, what do? Go get a drink. If you're tired, what might you do? Take a nap, go to sleep. If you're hungry, you're going to eat. If you're broke, go make some money. Go find a way to add more value in this world. Go be a builder, a creator. And if you have to do stuff that's not what you love doing in that moment to create more for those you love and protect, well, what are the other choices? Is that a lack of resources or resourcefulness? Let's move on. So let's talk about the mindset of a builder versus a borrower. And a lot of you can be both simultaneously. A lot of you can be both a builder and a borrower simultaneously. And sometimes it makes sense to do both. Sometimes if money's cheap, maybe it makes sense. But we're talking about our patterns, our root, our base, our structure, the bottom of the pyramid. That's why I put a big blue box around. We're talking about our structure, our physical nature. Think of this. When you're healthy, you can have 1,000 dreams, 1,000 places you want to go, 1,000 trips, people, concerts, just things. I always started thinking about all the things and wanted to say them. Places we want to go, things we want to see, people we want to meet. And when you're don't have your health, how many focuses do you have? One. You want to be healthy. So our structure, our body is first, right? Our spiritual, our physical, our emotional. And then that is the bottom. That is all we're talking about here. Becoming your own banker, creating your own banking system, bringing back banking to the you and me level is not a get rich quick scheme. It is not a get wealthy scheme. It is a control your money in a guaranteed fashion with less leakage, with less other families making money off of your money that you don't want them to make money off your money. You don't even know that they're making money off your money. You're not even aware that that might be happening. That is what being a borrower is. Someone that's willing to go along with the status quo, someone that just keeps trying to squeeze a little bit of extra out and of their life and do a little better. And you're not focused on that foundation, on that saving, on that loving yourself a little bit more and paying yourself a little bit more. And then as you go up in the builder mindset, as you become aware that everything's possible, being made in the image of God, wow, that's a powerful statement. So you can rise up, you can be more. And the question isn't, how can I afford this? It's how can I do this? What are the things that are going to move me the closest to that next action? And then you're going to build assets. You're going to go from, taking back control of the interest that's leaving your family and bringing it back. You're going to build up the opportunity fund, which we're going to talk about in the next slide. And then you're going to go make your money go to work for you. And it's going to start creating cash flow. And that is the future, passive income. So you can do and have the time freedom and the freedom of spending time with family, the freedom of money, the freedom of giving back. You'll have all the freedoms once you learn how to play this game. You guys want that? I love it. Shane says, got to know your numbers. Amen, Shane. Amen. And this is how it was taught to me by my mentor. Thank you, Brian. Every investment is an or option. I'm going to invest in this or that or that. I really like the ROI of this one. This is not that. This is an and both situation. This is, I'm going to build a foundation, the structure, the bottom of the pyramid. And then as I move up the pyramid, as I build an opportunity fund, everything becomes an and. Why? Because now I am saving in one hand. I am spending someone else's money, the insurance company's money, the mutually owned dividend paying whole life company's money, and I'm protecting my family. One job, $1, 3 jobs. $1, 3 jobs. Save, spend, protect. So you have the protection, you have the growth, you have the tax advantages, you have the access to the capital. If you've been on a strategy call with me, if you have started your policy with me in my education and how I teach, then you know I've gone through a T-chart with you. I've shown you why the banks are keeping $225 billion in bank-owned life insurance. I've shown you that your money is growing in a stable environment over 100+ years, profitable every single year, no matter what's happened in the world. I've shown you how it is protected against liens and judgment, how it is accessible, how it is growing tax-free and guaranteed with a guaranteed cherry on top. All of those things. These are the things that you would you might list if you were writing down the perfect investment, which we're not talking about. We're talking about a process. And so let's do this really quick and then get back to the program. So if you're new here, smash the button, subscribe, and ring the bell because it might just turn orange like my buddy and son, Connor Patrick, likes to say. Invite your friends here. Join the Infinite Banking bus. It's a big bus with lots of room and everyone is welcome as long as you have faith in your journey and have curiosity and are wanting to take back control of your money. So make sure you're sticking around, learning new content, and let's continue our journey together here. So let's look at Andrew. You might be an Andrew, you might not. So remember, there's not just one way to do things. There's many ways, but this is an actual client, a case study. So let's look. So Andrew initially was saving money in a high yield savings account, some in a rainy day fund, in a couple of different accounts. Anybody familiar with that? Anyone have money in multiple bank accounts, just kind of earning different things in different places, maybe playing the shell game to keep your money not just in one bank in case that bank goes bankrupt, which happens a lot. So Shane had a bunch of savings. He was pretty good at paying himself first, had good discipline financially, which is a great partner for one of these mutually owned dividend paying companies. And he decided, like, his goal, we had his focus, we had the conversation, we set his floor, we set his ceiling, and we decided on where he was going to wade in and start his testing, meaning get approved to be an owner of his own banking system. So we relocated about $75,000 from his system, from his bank, into this policy. Now, some of that was his annual premium deposit, some of that was a dump in, but it gave him access to over $40,000 immediately within the first 30 days. And that was the average investment that he was making as a real estate investor at that time. And so, about 6 months into the journey, he had an opportunity come up. And right now is a great time to be sitting on cash. At least that's what I hear my peers say, like Chris Noggle and Warren Buffett and others are sitting on cash because there's going to be so many opportunities. It's going to be like a Kmart blue light special. If anybody remembers Kmart here, it's going to be like, wow, I can't believe I can get that. Are they sure I'm not stealing this? Like, I can't believe it's this cheap. There's going to be so many opportunities. So sitting on cash isn't a bad thing. Having cash in this type of system might be the most brilliant thing that people are doing. But Andrew went ahead and waited, took out a loan for $40,000, did a real estate flip. The cash value kept growing. He was protecting the family. This investment paid off in 8 months. He repaid the loan, kept the returns in the system, and he just kept repeating the process. He built the opportunity fund using money that was sitting idly, right? We found the money. This is what we're looking for. We're talking about today, how do we find the money? I don't want to lose focus on that. And this creating, I want to offer this framework. This framework, this is not an IUL. This is not, you have the upside, you know, the upside opportunity and the downside protection. No, this is a floor and the ceiling, like an actual floor and a ceiling, which you know what they are. They're defined and they're not moving. And we give you a focus. This is from Dr. Benjamin Hardy's Future Self Thinking, the science of your future self. The floor is your standards, it's your base, it's your habits. It is when you get up and you jump out of bed, that is your standard. That is your floor. Do you need to raise your floor? Your floor, when it comes to infinite banking, is going to be the base, the minimum that you can pay to make sure that this stays in force for your whole life. And we'll define it and we'll make sure it's a number that you're comfortable with. The PUAs are the cash value, but they are the flexible portion of this amount of your premium deposit. And then you have the ceiling, which is defined as your MEC limit, right? If you go over the ceiling, it becomes what? A qualified plan. What? That's wild. Did you guys know that? Did you know that once you go over that ceiling, once you go past the maximum efficiency point, right? Your maximum efficient contract, another way to talk about MEC, to bring it right up to that line, it becomes a qualified plan. And you start having the same kind of tax implications that you would in a qualified plan. And so looking at this, we're building the policy for you specifically for where you're at today, for what you're wanting to accomplish, so you can make progress to have happiness, so you can scale from here today to this long-term vision that's off the chart. These policies are structured with the flexibility, intentional flexibility, a range that's not a rigid number, and the premiums aren't bills, they're deposits into your account. On page 85, part 2 of Becoming Your Own Banker, which you have to pay tribute to every time that we meet, because this is the framework for everything. This book by this man. And on page 82, it says in part 2, if you knew, you guys can answer this in your notebooks in your chat, if you knew at passive income time that every dollar that you deposited, that you premium deposited into this account would be available tax-free, would you hesitate to put more in earlier? Answer in the chat. Would you? And so let's determine your range. Let's look at this as what can you fund consistently without stress? I like to put up the bumper rails and let you know that the most that you can contribute on an annual basis is 20 to 25% of what you earn. The least should be around 10 to 20% of what you earn. Sometimes, if you really understand this and you're getting into the habit of paying yourself and you've had some discipline, maybe it can be a little less. But what can you fund consistently without stress? Knowing that even if you lost your job, you could go out and find one where you could pay that floor. And then you're building in the room, right, for banking. You're building the room to store the money that you can use as an opportunity fund or for whatever you're going to need for your financial needs in your life for the banking. You don't have to max it out every year. Heck, one of my best bankers is going to do exactly that. He maxed out everything I taught him in year 1. You can go listen to my podcast episode and hear Corey's journey. It's a beautiful journey. It's a beautiful shift of his energy. And in year 2, he's going to concentrate on paying his loans back because his thinking is rethinking. He's not going to look to keep expanding his system through more PUAs, more PUAs all the time. It's going to be a balance of being the honest banker, expanding the system that fits his lifestyle. And this approach is going to give you freedom. It gives you a rhythm. It gives you grace. No more fear of being locked in. Just a custom plan that fits you that you can grow with. Does that sound pretty good? And I see everybody there saying, I want to put dump-ins in. Cool. I will also tell you what a dump-in gives you, what the trade-off is, and what it is not. Maybe it makes sense for you. Maybe it doesn't. Maybe we got to look at all the determining factors. It depends. So thank you for putting that there. And the security through flexibility. This is Monica's story. Monica, a little younger, a little newer to this concept, but pretty savvy financially, had pretty good habits, pretty good patterns. And she was already putting a certain amount of money away in her qualified plan. That's where we found her leakage. And we talked about it. I'm not a financial advisor. I'll never even play one on TV. And I'll never be one, a licensed financial advisor, ever. Promise. And nothing wrong with them. I'm just saying it won't be me. That's not my role. My role is to break patterns, to teach banking, and to help you take back control and to build a community to support all those things. So Monica, in our call, in the strategy session, we found that she was putting about $300 a month because she was getting a match and she was looking to max that, put as much as she was comfortable with into that qualified plan. And after our conversation, I said, hey, let's look and break this all down. And we found leakage in different places. Some was lifestyle creep. Some of it was qualified money. Some was going into an HSA. And we just said, well, hey, if you're going to start this system, what would be some things that would make this meaningful to you and manageable? And we came up with a $300 a month base premium. And we actually designed it so we could add a little bit more PUAs in as she grew with the plan. And she was comfortable with this because she had already been doing this for a couple of years. We weren't changing anything except the one thing. Where was Monica's money going? Remember, we're finding money. This is like a treasure hunt. And then during that first year, she didn't overfund. So she was able to contribute more to the PUAs as her income allowed by just acting as a banker, working with an insurance company that she's a partner in and asking questions that I can teach you. And she didn't start bold or big, but she was bold. She was committed. She had conviction. She didn't feel pressured and she stayed consistent and she started to grow gradually. Now, I'm pretty certain that Monica is pretty close to being in that 91% of people who come back and start additional policies. She's almost at the point where her new business, her banking business, is running so efficiently it's almost time to grow and build another warehouse of wealth. And again, if you're new here, you might not know all the benefits of using a permanent dividend paying, mutually owned whole life company as the engine, as the frame of your banking system. But we want access to the money as it grows guaranteed and it's compounding. We want the liquidity, meaning the access. It's not locked up in financial prison. We want a structured system that gives you flexibility on how you pay your premium deposits and how you pay your loan backs and how you manage the system. We want you to be protected with guarantees while pursuing your wealth, while pursuing your freedom and the things that you love. And again, it's not about creating stress. It's about exactly the opposite. It's about abundance. It's about believing your future. This is how the wealthy think. This is how builders think. They put dollars into a system that multiply, not just sit, not just wait and hope and pray that things are going to turn out okay. No, they take action, but they do it in the safest way possible. So if you're new here and you're looking to start your IBC journey, at the end, you'll be able to scan a code and schedule a conversation with me. But you got to begin with what's comfortable to you, not what's comfortable to me, what's comfortable to you. Where are you today? And sometimes I might tell you, hey, you're not ready. You got to go do the thing of making more money and paying yourself first. You got to design this with flexibility in mind. The rhythm, the consistency, the persistency beats intensity. It beats coming in hot and fizzling out. Because guess what? It's your whole life. It's a big commitment. And I'll ask you guys, I've asked this a few times this week, how many of you here have 30-year mortgages or have had 30-year mortgages? How many of you have bought and had car payments for most of your adult life? You're committed to those institutions, those kind of payments. So if that's the case, why would you be committed to paying yourself first? In both the mortgage and the car example, who is actually in control? If you don't keep paying your mortgage every month, is the house going to remain yours? If you don't keep paying your car payment every month, will the car remain yours? No. So again, it's about loving ourselves a little bit more, paying ourselves first, and changing that one thing. So start small, start smart, build consistency, and start with an intention of focus. Remember your floor, your ceiling, and your focus. So can't even say this without even smiling and almost laughing. Arg! Like pirates, we found the loot, the booty, the funds, and the fun. What's the difference between fear and faith? Answer in your mind, answer on your paper, answer in the chat. What's the difference between fear and faith? Both are a future projection of thought, of our mindset, right? Both faith and fear are just a future projection of what we believe. So, what path are you going to choose? Let that sink in. What path, fear or faith, logic or chaos, will you pursue going forward towards financial freedom? That's your question. So, if you're new and you're learning, keep training. If you're ready to test and it's time to jump in the water, well, when's a better time than now? If you already have the savings, maybe some of the lost money. And I want you to share this webinar with someone who maybe hasn't been here before, someone that you know, someone that needs to see this. You just need a system, right? You just need a system, a framework for what is meaningful and manageable. Controlling your financial future is about controlling your money and building a foundation with guarantees built on hundreds of years of consistent, persistent results with a partner, a mutually owned dividend paying whole life company. We have again showed you how to make that you make plenty of money and you just have it going places where it isn't doing the best work it could for you and your family. You've once again given me your most precious resource, your focus, and I am so grateful to serve you. Now, your choice is to remain on the sidelines or cannonball in and find a team that not only supports you, but practices the same strategies in our own lives alongside you. So subscribe if you're new, smash the like button, ring the bell, to be alerted to new content, helping you learn how you can take back control of your money and become your own banker. Invite others to the Infinite Banking Bus. There's plenty of room. And I know who you invite here, you will become the biggest blessing to that person you invite, to their family. And the ripple effect when people start coming back to you and telling you what it feels like to feel freedom, you'll be grateful that you invited them. Remember, this is a process of skill. And if you don't yet know something, remember, you don't know it yet. So again, thank you for your time, your focus, your energy. I'm blessed. I'm going to see you guys in the next episode. And Carla, cannonballed. I like it. Let's keep cannonballing. Let's keep being brave. Even if you're dipping your toe in the water, get in the water. You got to get wet at some point. You got to learn. You've not learned anything in your life without doing the thing. So be blessed, y'all. This is fun. I cannot wait to see you all again next week. It's going to be awesome, like it is every week. Keep bringing your energy. You guys rock. Thank you. Today, we showed you how to find the money to fund your dream, to fund your banking system, your structure, your foundation. We had some fun. We found, like pirates, we found the booty, the treasure, the money, and we had fun doing it. We showed you where there's financial leakage in your life, potentially. We showed you how to take back control by changing just that one thing. We talked about how you can build a floor, have a ceiling, and have a focus. And as long as you have belief that you can do this and the mindset and understanding of what to do with your money, and that is control it. Put it in a place where it's guaranteed stable to grow, free from the piracy of others. We covered all that today. I am blessed with your attention, and I'm going to see you guys in this next video where I talk more about the infinite banking concept, and we're going to continue this journey together. Remember, whatever you don't know, you just don't know it yet. You are more than capable of achieving your outcome, your dreams, your focus. So until next time, I'll see you in this video. Be blessed. If you're ready to cannonball in, make sure you're booking that call with me by jumping on a call and getting your own strategy session. It's free. It's not simple. I'll see you soon. Be blessed.